Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Steve Sosnick, chief strategist at Interactive Brokers, to discuss how traders should position into a long weekend, not just a typical weekend, but a holiday weekend. And Steve, it's so interesting. We just had Memorial Day, we had Juneteenth, now we have July 4th weekend. Every 2 weeks we're having these 3-day weekends, and it makes me wonder, is there more risk associated for traders in a volatile market that we've been trading in?
Well, good afternoon, Jill. I think that definitely it's a little unprecedented for us. It's like sort of the summer holiday season. We used to have the month, really the month between Memorial Day and July 4th, and now we've got Juneteenth in the middle, which I'm certainly not going to complain about. But I do think it challenges us because I think there's more. The vacation season, I think, may have been pushed a little forward because of people taking advantage of the 3-day weekends. I think right now it's pretty tricky because you really have to wonder who wants to be too aggressive going home long ahead of these 3-day weekends. We did see the markets really rally into Memorial Day weekend. I think it was sort of like a weekly expiry phenomenon where people just were sort of feasting on calls and watching them go higher, but that ended pretty badly the next week, and I think people are a little bit more gun shy about wanting to take big risk into the weekend. But what it means also is anything can happen between now and the close. I can come up with a scenario for anything, and what I think it means also is don't read too much into it, because I don't think it means very much for the longer term trends in the marketplace.
Yeah, and I believe it was Memorial Day, and I can't remember for Juneteenth, but we did see a market sell-off, but into the close, people covering their shorts because they didn't want to be short on the flip side either, going into a 3-day weekend, because there is still trading activity that's going to take place outside of the U.S. on Monday as well, which can also impact positions.
Absolutely. Juneteenth actually was fascinating to me because we really sold off. We had the Fed meeting on the 15th of June. On the 16th, we sold off hard. It was a little bit of a head fake rally the afternoon of the 15th. Then we really sold off hard when the interest rate hikes sank into people. The 17th was a quarterly expiration, and we actually did like nothing that day. It was actually sort of startling to me how little volatility there was ahead of a 3-day weekend with a quarterly expiration. So I think a lot of the positions were squared early that day, and we sort of meandered in the afternoon. I don't want to read too much. Again, don't want to read too much into this stuff. Because each of these days is sort of an outlier, but as you mentioned, having 3 outliers in basically in a month is a very unusual situation for us.
So as we look forward to next week, and of course these shortened weeks, these 4-day work weeks seem to be even more intense than a regular work week. Is there any particular data or stock news that you're going to be looking for?
Well, I think for next week, the payroll data on Friday is a number that can never be ignored. Remember, if we're concerned about the Fed's dual mandate, well, that's half of it, right? Full employment and stable prices. We unfortunately kind of know where we stand with stable prices, but let's see how the payroll numbers play into that as well is very important. And I do think you're going to start to see people beginning to focus on earnings, which are going to start coming the week after that. So I don't want to get too far ahead of ourselves, but I think there's a lot of uncertainty going into this earnings season because of the uncertain economic environment. And it's really going to be fascinating to hear what companies have to say about quarterly guidance going forward, because they may be as confused as everybody else.
Yeah, I would agree with you, because you're also going to be looking at the second quarter, right, which is April, May, June, when we really saw inflation and Fed action pick up in earnest. So this quarter is really going to be reflective of that. I feel like the quarter prior, it wasn't as bad as in Q1, but I think, a lot of the bad news will be reported in July based on what we saw in Q2.
Agreed. I think so. You can look at it one of two ways. It could be what we call the kitchen sink type of quarters, where they throw everything out there and say, okay, well, everybody knows we're in a rough quarter, so let's put everything out there. Or they may just be more straight up and tell us what the number is. I'm not going to say companies lie. But I do think they have some ability to shade the narrative. But then the question really becomes, what are they going to say about next quarter? Because your guess is as good as mine. I think right now it's really murky, and I'd like to think that some of these corporate CEOs have greater insight into what we're going to be looking at for the next quarter, because we could all certainly use it.
We certainly can, Steve. Thanks so much for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks.